Good afternoon, traders. This is Sitlengema from QuickTrade. Welcome to our technical analysis webinar session once again. Please send me a message using the chat tool at the bottom of your screens to show that you can hear me or see my screen. Okay, I've got my first. I can hear you, Dwayne Smith. Thank you so much, Dwayne. Loud and clear, Kumbulani K. Okay, perfect, big guy. Okay. Okay. Success. Have you done any training on technical analysis? The same question applies to everyone. Joey, I think I've seen Kubulani's name before. Dwayne and Vessel Kutia, have you guys done any training before on technical analysis? Do you know anything on technical analysis? Oh, you think you have some network connection issues there? Okay, just attending to get info. Yes. Okay. Okay. I haven't done any training. Success. Okay. Marubini is there. Hi, Marubini. I can see you've just joined us. Okay. Okay. I want us to look at what you need to ask yourself when you are trading. Are you trading with the trend? That's the main thing that you should really ask yourself as a trader if you are trading. Are you trading with the trend? Meaning, are you going with the flow of the market or are you going against the market? If you want to make money in the market, you need to make sure that you are on the right side of the market. You are trading where the money is going. You are not going against the market, because if you do, you will lose a lot of money. The market will just take the money away from you. So the best way to do if you are really new in trading is to use maybe as a beginner is to use your simple moving average to make sure that you are on the right side of the market. I'll explain to you what I mean before we go to live examples from people that have been trading the market for quite some time. They will be submitting their trades, asking me to have a look at them. We'll have a look at them, discuss, and do some analysis. If you don't agree on some of the things, that's also allowed. You are welcome to disagree with me if you don't see the same picture that I'm seeing on my end. So you mustn't be afraid to say that, no, I don't agree with you. You don't make sense. I don't think that I like the way that you look at the market. Wara, wara, wara. So yeah, we can't do that. Okay. Okay. Let us look at. Okay, this market is okay. Give me a success. Give me any stock that you'd like me to analyze for you. Stock, any instrument, currency pair, commodity, whatever. Please give it to me. It's not just I mean, success. Anyone can submit something. Okay, Vessel has just given me Netcare. Let's have a look at Netcare. Netcare has been coming down. Okay. Let's look at Netcare from 2012. We'll start looking at Netcare from 2012. Let's remove that line that we had there. That line is called the simple moving average. We've just removed it. Okay. We've just removed it. This is the monthly time frame. If you don't have the monthly time frame on your chart, go to where it says time at the top of your screen. It says time. That's exactly where my cursor is right now. Click there. If you don't have the monthly time frame, go to edit. Click on edit. You get one of these boxes with a plus sign inside. Click on that plus sign and you get this small window with period minutes value 1 here at the top. If you want it to be a weekly chart, change it to a weekly chart. If you want it to be a monthly chart, change it to a monthly chart. Always keep your value at 1. Unless if you want maybe a quarter is 3 months. Well, I mean, you don't want to do more than 1 week. On a weekly, you can just keep it on 1 hours. You can keep it on maybe 4 hours, 8 hours a day, whatever. So this is how you add the stuff. If you are looking for a month, value is 1 month, then apply. Then you have your monthly time frame. When you go back there, your monthly time frame is there. I have a few right now because I've been adding them every time when I teach people how to add these, when I show them how to do this. If you put your cursor on any of these, like here it shows value 1 period month. It's 1 capital M. That means it's a month. If you put your cursor on it, it shows you period month. If you go there to 1 minute, it shows value 1 period minute. I mean, in minutes, it's 1 small letter M, and in months, it's 1 capital letter M, as you can see here. So please don't confuse the two because they are both 1M, but there's 1M for the month and 1M for the minute. Okay, Marubini gave me, okay, it's fine. We have 3. Okay, okay, let me show you different candle types that we have, or chart types. Sorry, chart types, not candle types. Sorry. Okay, we have a line chart. If you go back there to the top where you get these 3 candles here, it gives you different types. If you click on the down arrow, you have a line chart. After a line chart, we have a bar chart. A bar chart works the same way as the candlestick. It's just that we prefer using candlesticks over the bar charts, but the bar charts gives you the high, it gives you the low, gives you the open, gives you the close. Like if you put your cursor on this one. Okay, let me show you how to read this. At the top here, you see this blue part, the shaded part, just below NTC. It says here bars, date, time, open, high, low, close, percentage change. This is percentage change, guys, where it says change, comma, percentage sign. This is percentage change and volume. So let's put our cursor on this particular bar. This was on, okay, it was a full month bar. Okay, this was in April 2018 this year. The market opened at 28.41 and it opened lower and it closed the month at 30.99. And the percentage change there was 9.08%. After that, the market came down. The high was 31.60, the low 26.20. That was the low, 26.20. That's how you read it. It opens from your, I mean, the buys or the positive days, they open from your bottom left corner, this part here. There's this small thing here on the side, or this small handle on the side, and it goes up. and it closes at the top right side of the stick here. That's where it closes, and the close, it opens on I mean at the top left side of the stick, and it closes on the right side of the stick at the bottom. So this is a negative close. The market closed down. If you check at the percentage change there, you see that the price is negative 3.77 or 3.8%. The open was 30.77 and the close was 29.61. That's where the close was. And from there, the market kept on declining. That is a bar chart. Now let's move on to candles. This is the last one that we're going to look at. This is the one that we use. We're going to be using a lot. This is how you read your bar. The shaded part, you see the colored part, the shaded part is called the body. Where the shaded part ends or begins at the top here, this is where the price closed. This is your close, and the lower part here is your open. This lower part here is your open, and that part there is your close. If you put your cursor on it, it shows the open was 28.41, the high was 31.60, the low was 26.20, the close was 30.99 at the top here. So I'll mark the top for you. Let me mark it. This is your close. The one that I've just pointed at here. This is your close. This is your open, where the price opened. This is where the price opened. This part here is your low for the day. Oh, sorry, low for the month. This is your low here. Let me make this low. This is your low. The black tick there that I have at the bottom. And that top part there is your is your high for the month. That's how you read it. This is your open here at the bottom, close there at the top, put your cursor on it. Percentage change is 9.08% positive. Let's look at the negative month. Negative month was this one. The Netcare had changed 3.77%, and this was back in May. Let me show you the open, because I mean this is going down. So it opened higher and had a lower close. It closed here at the bottom. This was the low, and this was the high. If there is anyone who doesn't understand what I've just tried explaining now on how to read the candles, please let me know before I move on. Because this is a negative candle or a negative month, open there at the top, close here at the bottom. This is your low, and that is your high. Don't worry. I will save it. I'll make sure that you get it. You get this one. I'll post it on our Facebook page, and on YouTube. You should be able to get it if you go there to check it later. Success. Okay, now that we know how to read these candles, now let's have a look at the structure of the chart. Now, what we want to look at is the structure of the chart. We want to know whether the buyers are stronger in this market or they are weaker against the sellers. So we need to check that to see whether the market is rising or declining. This is the chart, and this is the structure that we have. On this structure, this is what I want us to do. I want us to add the candlesticks. I want us to add the candlesticks. Oh, no, sorry, not the candlesticks. I want us to add the simple moving average. The simple moving average is going to help us monitor the direction of the market. It's not going to really tell us what the market is doing. It will just monitor the direction of the market. We use the 10 simple moving average. The 10 simple moving average that we are using here, we will be using it on the monthly time frame. To do that, you right click on your screen, you come down to indicators, you go to add indicator. From there, you go to SMA, simple moving average, and you click OK, or double click on the moving average itself. It's possible. And there are two arrows here. You can use the down and the up arrow. Let's use the up arrow to push the price up to, or to push the value of our simple moving average to 10. Our simple moving average value is now 10. Then you click OK. Okay, now let us try and explain how this works. I don't know how clear the simple moving average is to you, but let me try and make it a little bit thicker. You can do that. Okay, now we have a nice thick red line there. This is how it works. If the price is trading, the candles here, they are called the price. The price, or they represent the price. It's moving nicely above the simple moving average. When it's moving up above the simple moving average here, it means the momentum is positive. Buyers are in control of the market, so it makes sense for one to go in and buy such a stock, because I mean it's in a rising momentum. Buyers are pushing the price up. So if you invest, you will get better returns. But when it breaks below the simple moving average, that's when you should get worried and start maybe looking at selling that particular market. But you do get false breaks or false breakouts every now and then when using the simple moving average. So it's important to understand the overall direction of the market even without the simple moving average. But using the simple moving average is the easiest way to see where the market is likely to go next. Okay, 2014, after the market had done this, it carried on rising and it was above the simple moving average. It was the right time for you to continue buying this market. So if you were a long-term investor, what you could have done, you could have maybe exited the market when it closed below the simple moving average first month of 2014. You could have exited that market and waited outside, but the following month there was no follow through. Sorry, there was no follow through to the downside. The market just kept on rising up until it closed above the simple moving average once again, where you were supposed to go in and initiate your longs. From 2014 to about 2015, you could have gotten in here, maybe gotten out there at the top when you had another close below the simple moving average, and it traded below the simple moving average all the time until this close here in October 2016. October 2016, we had a price closing above the simple moving average. But if you look at the structure of that move, you could tell that the stock had a bearish momentum there. The sellers were in control of this market, pushing the price lower. It just happened in this month that it went above. The following month, it was back below the simple moving average again, and that was in November 2016, end of November, and the price kept on declining until the price got down to these levels, 22.50. And recently it broke above the simple moving average. That's when you're supposed to exit your shorts. That was at the beginning of the year 2018, end of January. From there it rose. It went up to about 31, 30, very close to 32. Then from there, sellers came in because I mean, there's resistance there around 32. Sellers came in and they pushed the price down. It hasn't actually closed below the simple moving average, but if you look at that structure from the top, the main trend on this one is still down. It hasn't really given us any reason that Netcare is really going to be doing that well going forward. I'm just looking at the monthly time frame, and that's the analysis that I can get from it. Is there anyone who doesn't understand what I've just done here? Is there anything that is not clear that you'd like me to go back and clarify for your better understanding? If there's anything that you don't understand, please explain to me so that I can go back and explain. Okay. This is the first step that you look at to decide whether you are going to be buying or selling the business or the share. That's the first thing you look at. The next thing you look at your lower time frame, like your daily time frame. If you choose not to use the monthly, you can use the weekly. At the weekly, you're applying the same principle. You want to see the price trading either above or below. If it is above, it means that that stock is rising. If it is below, it means that that stock is declining. Now I'm using the weekly time frame. You can use the weekly time frame for shorter term trades, whereas with the monthly, you can actually hold these shares for a very long time. But it doesn't mean that you cannot do short-term trades. You can still do short-term trades using the weekly. So let's check on the weekly. Weekly, we closed above our simple moving average around the 18th, the week of the 18th in 2017, December last year, and the price started rising. It went up to the top here to about 30 bucks from 23, 24 levels, and currently we are still trading below the simple moving average. From there, the price started coming down, and it is still down. So I'm happy to hold my shorts now because it's still trading below the simple moving average. But this is what we need to do. We need to have a look at the daily time frame now. We need to check whether the daily time frame is saying we should continue shorting or maybe we should not be shorting MTN. Shorting means selling, well, I mean, going long means buying. That's what those terms mean. So we're going to be using them a lot in our lessons. Okay, so if you look at your simple moving average, your simple moving average is also saying sell here because the price or the candles are below the moving average. When you get maybe the moving average going above or your price going above your simple moving average, that would mean that maybe it's time for you to start taking some long positions, going in and buying. But if your weekly time frame and your monthly time frame are saying sell, you do not go against them. You have to make sure that they all agree. Do we all understand? Oh, okay. 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 Who doesn't understand, guys? Okay. Let me do this. Who doesn't understand? If you don't understand, please let me know so that I can go back and explain. In fact, it makes sense that some people won't understand because they are new to this. You cannot just get it. Okay. Okay, let's try and do some analysis on Netcare now. Now that I've explained to you how it works. Okay. Well, Netcare has been dropping for the past 2 months. It's been dropping for the past 2 months. Now we haven't broken below the simple moving average, but we are playing right on it. And today is the 30th of July. Tomorrow is the last trading day in July. Tomorrow is the last trading day. If we close below the simple moving average tomorrow, there's a good chance that we're going to have more people coming in and selling Netcare down, maybe back down to, I'm looking at the price maybe coming back down to 22 once again. I'm looking at the price coming back down to 122 once again. And there's another technique that we can apply here called the trend line. I've just drawn the trend line there. I've just drawn the trend line there. We've broken below this trend line slightly. I'm not really happy about the way that we've broken this trend line, but it looks like we've broken it. I will show you. I mean, the previous instances when we broke below the simple moving out, sorry, below the simple moving out, below the trend line and the simple moving averages. Sorry about that. You see here, the market went up like this. It went below the simple moving average. The only part that we don't have here, the only part that we don't have here yet, we don't have the price below the simple moving average yet. We don't have, but it looks like it's starting to break down. That was just a pullback going up. So for those that trade the pullback strategy, there's a strategy called the pullback, where you wait for the price to go against the main trend or the major trend, and when it reaches a point where there is some resistance in the market and the price starts coming down, you sell there. If it's going down and the price continues going down, if it's going up, it pulls back against the main trend, which is the uptrend. It pulls back. When it starts reversing, starting to get ready to go up, you go in and you take a long, and the price continues to rise in the main direction of the market. That's how you do it, basically. So here I'm expecting to see a little bit of selling on Netcare going forward. Look at the weekly time frame. The weekly time frame is also confirming that this one is a sell. It's trading below its simple moving average. Let's look at the daily time frame. The daily time frame. Okay. Daily time frame. I just want to make sure that I place this line correctly. Okay, just done it. Okay, the market was rising here the whole time on the daily time frame, and it's now broken below. It's still trading below the simple moving average. Please take note of that. It's still trading below the simple moving average. It hasn't gone above. As long as the price is still looking like this, there is a good chance that sellers are still going to come in numbers and push the price much, much lower. So personally, I do not really like the price of Netcare at these levels. I don't really like it. I don't like it, but let me apply my long-term analysis to it. I just want to check if there's anything special that I can find here. Okay, June 1st, first 6 months in 2018. This bar is made up of 6 months. We closed 11.82% up in the first 6 months of 2018 on Netcare, and the close was 27.62, and the open is 24.70. Open is 24.70. 26. Okay. So that area there is very important. I think it's going to act as our important resistance there. So this is the level that I'm looking at here using the half yearly charts. That level is very important, 27.65. Even if the price were to break above the simple moving average, go up there towards 27.65, I expect to see some serious resistance there from the sellers. Pushing the bulls away from that zone and pushing the price down lower towards the 24s and the 22 level that I spoke about earlier. Ultimately, that's where I think the price will likely head down to going forward. So that's a level that's very important on Netcare. So for that reason, I wouldn't want to buy off Netcare right now. I think there's a lot of risk still lingering over people on this one, Netcare. Any questions, guys, before I move on to Pick and Pay from Marubini? Okay, let's look at this. Okay. Okay. We're checking the first 6 months. First 6 months of 2018, and the market went up 7.5%. Talking about the price of Pick and Pay specifically, it went up 7.5%. If you put your cursor on it at the top there, percentage change is 7.5%. And the price is trading below this area here. That area is 75 or 74.85. That area is likely to be our resistance going forward. And the support level that I'm looking at on this one is around 71. It's around 71, 72 bucks. I think that's where our main support is on Pick and Pay. Okay, that's the area that we got from that bigger time frame, the 6 months. Now let's look at our double top formation here. This is not a complete double top formation here. Some would say that we had a breakout here, but I think this was a fake breakout. This was in April. End of April, we broke above that thick blue line at the top around 78.24, and immediately after that, the market broke down. It started coming off. And that 78.24 is still our resistance, and another layer of resistance for me is around 75 or 74.85. So what we're waiting for now, we're waiting for the price to maybe break below the simple moving average, around just below 71, 70.56 to be exact. That's what I'm waiting for. If the price really breaks below, we could see the price of Pick and Pay coming a little bit lower, maybe even down to 57, 60 bucks before we see another rise on Pick and Pay. But we are not done yet. We are still busy analyzing. The price is still above the simple moving average, so we don't want to try and pick the bottom here. We want to first get our confirmations before we do anything. We are trying very hard to be conservative. We're trying very hard to be conservative. Okay, now let's look at the current structure. Current structure, we are below the simple moving average on the weekly chart. The weekly chart is saying sell. The monthly chart is still on a buy, and already our price is trading below 74.85 or 75 bucks. To me, this is an early warning for those that are still holding some long positions on Pick and Pay to get out and prepare to sell this market. It's still early days, I understand, but I don't like the structure that I see here. We had this rising trend line here. Okay, we had this rising trend line here, the one that I've just drawn here, the rising trend line here. The market is trading below that rising trend line. We are below 75. I think the next thing that we are waiting for here is the price to break lower. I think the price should drop a little bit. I'm looking at the price after this area here. After 72, 61, 72, I expect the price to come down to 66. 66, 65 levels. If those levels fail to hold, I'm expecting another drop towards well, 60 bucks, 57 bucks before we can expect a bounce on this market. Okay, let's look at the daily time frame to see what the daily time frame is gonna tell us. Mhm. Check if my lines are good. Sure, this is not good, eh? Ish. Mm-mm. We're getting two conflicting analysis here. If you look at the daily time frame is saying that no, we haven't broken below our rising trend line. Look at this trend line here that starts from October 2017. Every time the price, every time the price comes down here, it bounces. Every time it comes down here, it bounces. And if you check here around 71, 72, it looks like we are bouncing off this area, going back up to 75. I think what's important to note here is that if the price, like today, we came down and the buyers came in, pushed the price up. We don't know whether the price is still going to close above this area here yet. We need to wait for the close today to see exactly what's likely to pan out next. Around 74, 85, 75, I think that's our main resistance. If we fail to break above this 75 resistance, there's a good chance that the price will come down, break below this rising trend line around 72 and go lower. But if that doesn't happen, it's possible that we may still see the price breaking above 74, 85, 75, heading up towards 78.50, 79 levels before we can expect maybe to see some sellers coming in and pushing the price a little bit down. So this one for me, sure, it's very difficult because we remember when we went to our 6 months chart. Let me go back there. When we went back to our 6 months charts, we're looking at 74.85, 75 bucks. That area was well, that area is still our resistance. If we fail to break above that area, there's a good chance we'll come back down to 69, 70 bucks if that area fails to hold and move much lower, maybe towards 60. But I don't know. We just need to wait and see what happens. It's a little bit dicey right now. There are too many combinations that we need to look at. We need to look at the rand strength. We need to look at how our economy is going to do going forward. If the retail numbers continue to surprise, maybe to the downside, or continue to decline, there's a good chance that we're going to see this market really coming under a lot of pressure and forcing our retailers to come off as well or to decline also. Success. I think the reason why you are not getting PIK on your CFD list is that you are using the demo. You're using the demo account. If you use the live account, you should be able to pick it up. Unfortunately, the demo doesn't have all the instruments or all the CFDs. So that's my take on this one. It's very difficult. It's very difficult. Let's what happens next, because I mean if we close or if we close the month of July like this, there's a good chance that there may be another drop or another follow through to the downside here, because every time it goes back up to that 78 area, sellers come in and push it lower, and now we haven't broken below 75. So for me, I wouldn't touch it, unfortunately. Okay, we had Discovery by Success. I think we had a look at Discovery a few days ago, guys, but let's check it quickly. Okay, Discovery. Discovery, we had been trading above the simple moving average since the beginning, or on the monthly time frame. We had been trading above our simple moving average since the beginning of 2017 until the end of the year. And in May this year, we broke below the simple moving average, and we had a follow through. In June, the market went down over 4%, and now I mean, DSY is trying to recoup some of the losses. It's trying to regain some of the lost ground here since May. It's done very well because it's recouped. Well, I mean, very close to 14%. 13.75 to be exact. It's looking okay. Let's look at the first 6 months of the year. First 6 months of the year, the stock shared 19.67%, and right now it looks like it's busy picking up. We are marking this this close here for the first 6 months since the beginning of 2018, and where it came from. This is where it came from. This is where it came from. Okay. This is the range for me on Discovery. I'm looking at 150 or 147 and 187, 190. Those are the levels I'm looking at. And if we close the month of July looking as strong as we are right now, there's a good chance that we may have a follow through, depending on what the S&P does, as well as all the other, I mean, markets around the world. If they continue holding strong like they have been doing over the past couple of months, there's a good chance that we're going to see 186, 190 on Discovery. For me, Discovery is still on a buy. I would buy the dips or I'd buy the pullbacks on Discovery. Let's check what the simple moving average is saying on the weekly. On the weekly, we've just bounced off this support line that we have there around 147, and the price is rising nicely. We are trading above the simple moving average. Well, I mean, the week of the 16th, the market went up 6%, and in on the last week, the market went up 5%. And this week, I expect to see a little bit of an uptick again towards that 186 that we've mentioned there. I'm not saying that we may not see a pullback. We may still see a pullback, but I like the momentum that is currently taking shape on DSY. I think it's looking very good. I like it. Okay, this morning, well, I mean, over the past couple of days, we have been seesawing around this area. We haven't really taken out that area, so we just need to take out this zone, break above. Let me show you. We need to break above 168, 169. Any break above 168, 169 is likely to take us up towards that 175 area. From 175, 186, 187. Those are the levels I'm looking at. I'm still positive on this one until maybe I see any cracks on it. For now, I think the uptrend here is still intact. It's very strong. It's supported by a massive momentum behind it. So I'm happy with this. I'm happy with this. Okay, let's look at AVI. If no one has any question on this one, AVI we bought it at 100 a couple of months ago, targeting 110. It got to 110, around 110. It started stalling. It hasn't really managed to break above that area yet. Let's have a look at the first 6 months of 2018. First 6 months of 2018, we closed the market down 3.9%. The close was 108.20. So 108.20 is massive resistance on AVI in my view, because we closed the first month negative and we are trading below that area. Every time we try to go above that 108.20 area, sellers come in and push the price up. So yeah, you must be very careful there. You must be very careful there when trading AVI. I understand that it had been going up since 2016. It had been going up very nicely, but this may not be the case going forward. We may have maybe another quarter of negative performance, if not the whole 6 months or the next 2 quarters of 2016. Oh, sorry, 2018. The range I'm looking at on this one really is 100 is 100 and 108.20 there, or 109. That's the range I'm looking at. As long as this area here is not violated, 108 40, 109, I'm not really willing to buy AVI around 108, 107. I think it's very close to our overhead resistance there. That would be suicidal. I will never do that. I would never go in and buy this one. So that area is still some serious resistance. Let me look at the weekly time frame. Let's look at the weekly time frame. Let me make this a little bit bigger. Uh, 11 June. 11 June, the week of the 11th in June, when we bounced off that 100, when we made a call to buy to buy AVI, it bounced off this area here. It went up. Our target was 110. It hit 110. Let's see. The high was exactly 110. After that, it came down, and it never went back to 110. Every time it tries to go back to 110, I don't know if you guys can see those tails there at the top. I don't know if you can see them. Let me try and show you these tails I'm talking about. Okay, see that area, this area. Okay, this is the area I'm talking about. I'm talking about this area here. I'm talking about this area here, 110, 109. 110, 109. Every time it gets here, sellers come in and push the price down until we clear this area out nicely, that 109, 110 area. Then I would be comfortable going in for a long on AVI. For now, I cannot do anything because we haven't had any close below the simple moving average yet, but any wick close below the simple moving average, below that 108.41, which is our first 6 months or half yearly resistance there, around that area, I would definitely go in for a short. But for now, I can just sit on my hands and do nothing. But I mean, any break below the simple moving average here could that can easily take us down to 100, 101 area. once again. Let me look at the daily time frame. Daily time frame. We've just been playing around this zone here. We haven't really cleared out this area. So that's my main worry right now. That is why I'm saying that I'm not willing to go long on this one for now. I think I would put this one on the side. I'll park it. I'll park it, Marubini. I don't like it below 108.41. If you have any questions, please ask. Let's look at CSP now. First 6 months of 2018 on Cashbuild. Sure. Let me refresh this. This is not on. Sorry, I'm never gonna use this one here. Let's look at the year. Well, since the beginning of the year, the stock has been dropping. It's dropped more than, well, I mean, around 27%. It's dropped around 27%. It's dropped around 27%. The first break below the simple moving average on this one was in May 2018. We closed below the simple moving average. From there, we went down 12%. After that, we dropped 6.6%. And the horizontal line resistance that we have is around 343, 344, that zone. In July this year, it tried to go back up there to test that resistance line. Sellers were very strong around that area. They prevented the price from moving higher than that zone, and the price came down. As a result, we are down 6.63% since we last tested that resistance area there. So I'm expecting the price to continue moving lower until we get any bounce on this market. For now, I cannot see any. I think the sellers have been very strong on this market. It's possible that we may come down to 266, 270 bucks on this stock. Let's look at. Okay, it's got wide swings as well. The swings here are very wide. As long as the price is still trading below 343 and 331, I am short. I'm short Cashbuild. I think that we may still see 266, 270 on Cashbuild. Let's look at what the daily time frame is saying. It could be painting a different picture altogether for the short term. Let's check. Okay, the daily time frame, it looks like we've had some double top formation here at the bottom. If I do this, some double top formation. The market hit here around 295. It went up, so I'm expecting the price to be contained between 343 and 295. 343 and 295. Any break below 295 should see the stock dropping a lot lower towards that 266, 270 zone that I've mentioned. So for now, it looks like the price is likely to push a little bit higher before we see another leg down on Cashbuild. So that's my take on Cashbuild. Success. Okay, Marubini wants us to have a look at CML. I've been short CML for quite some time, but it's been seesawing around the same spot for a very long time. I don't know if it's still gonna move lower. but I still believe that we're gonna move low on that one. Sorry to make you repeat. You said long is buy and short is sell. It's like that. It's exactly like that. Success. Exactly like that. Okay. Now let's have a look at CML from Marubini. Yeah, welcome, Andrew. Okay, we'll have a look at Kumba also. Let's look at the first 6 months of 2018. First 6 months of 2018, the market went down 17.3%. That was a big negative move since the beginning of the year. And second quarter, sorry, second half to date, we are 3% up. Let's mark that close in June. That close in June was 58.31. We closed the market at 50. We closed CML 58.31, and currently we are trading above that 58, 58.31, 58.35. We haven't cracked this area 58.35. So as long as the price is still above 58.35, there is a good chance that the price is going to be bouncing up and down between these two levels. I'm looking at 62, 62.60, 62.70, and 58.35 between these two levels here. But we are below the simple moving average there. And I think that the price is still likely to come down towards 52 or even $50 on this one before we can expect any meaningful bounce on CML. So I've been short CML for quite some time, and I still think that is going to move lower. Let's have a look at the weekly chart to see what picture we get from it. Yeah, the weekly is bouncing off. Well, I mean, the CML is bouncing off this area. It's done that a couple of times. It did it uh, towards the end of June. It did it first week of July. It did again the week of the 16th, again last week. So I don't know exactly what's going to happen, but each time we try, we still close below the simple moving average. If you can see that moving average there, we always close below that simple moving average. So to me, that means that the buyers aren't that strong on the stock. If the stock goes up towards 62.50, 63, I would definitely go in and take a shot on that one. Although that's a little bit um, of an aggressive approach when trading the market, but yeah, I would do it. I would go in and sell CML. I think CML is still a short in my view, more especially if you want to trade the range. That range of 62.59, 62.60, and $58, 58.35. Let's look at the daily time frame. Okay, if you look at the daily time frame, you can even come down to 57.50. Every time it gets to that 57.50, it rises and is now above the simple moving average. So from here, I don't know what to expect. We may still see the price going back up to 62.60, 62.59 before coming back down to this range here. So shorting it around 62.59, I don't think that is a bad idea at all. What's your take on this one, Marubini? What were you looking at? What do you think is happening here, big guy? Okay, let's now have a look at Kumba. No, Marubini. If you are trading CFDs, I don't think that it makes a lot of sense to go in for a buy right now because you're going to pay a lot in swaps and the stock is still stuck in the range. So I think a short is in order on that one. Okay, Kumba. Let me first go to the first 6 months. Let me analyze it. Okay, first 6 months on Kumba, we were down 22.43%. That was a negative change to the price of the stock, and we are still trading below. And we are still trading below 296 or 300 resistance on Kumba. So to me, that's negative. I don't see anything positive on Kumba right now. I don't. Maybe going forward, the picture is going to change and look beautiful. For now, it's not looking good to me. Okay, let's look at this area again. You see, a couple of months we've tried to knock at this area, and each time we try, we fail to crack above 296. 52 and that 300 area. Each time we try, we fail. So again, in the month of July, it looks like we're going to leave that long tail behind and play around below that area once again. And if you look at the monthly chart, we are below the simple moving average. The only thing is that our simple moving average is still pointing to the upside. It hasn't really flattened out to show that there is really there is enough momentum to the downside, really. So uh, so uh, yeah, I'm not happy to buy Kumba. I'm not happy to short it. I just want to wait and get clarity going forward before I make any call. Let's have a look at the weekly chart. Maybe on a weekly we can get a better view of the situation here. The weekly time frame, sure. So far, well, I mean, last week we had a nice bearish reversal pin, and that happened right at our resistance. That's our resistance, and again here it happened there, and the price looks like it's busy coming down. It looks like the price is busy coming down, and I think that there's going to be a little bit more selling coming on this one. I think that we're going to get a bit of a sell off going forward on Kumba. I wouldn't buy Kumba right now. It doesn't look good to me. I'm now looking at the daily time frame. I want to see what we can get from the daily time frame. We have a nice rising trend line from the beginning of 2016 to date. The price is still looking like it's on a rise, but my issue is this line here, this line that is now turned into resistance. It was our support, now it is resistance. We price is trading below that. We are below the simple moving average, and today we are down 3%. We're down more than 3% on Kumba. We're down more than 3%. There's a little bit of support though around 280, but any break below 280, I think could take us down to 240 on Kumba. I would look maybe to start buying some Kumbas around 240. At the moment, I do not really think that Kumba is a buy, to be quite honest. I don't think that Kumba is a buy around two. Let me check. I just want to check something here. This sign doesn't mean anything. I just want to check something. Uh, yeah, I'm looking at maybe buying around. Sure, I think it could even exceed 240 and come down to 220, 200 levels before people before it starts looking attractive to the smart money in my view. So Kumba is not a buy. I think it's a short. You should just look at shorting maybe any bounces that push up towards 300. You can short those in my view. It's not a buy. Okay. Can you show how to put a stop loss? Sure. That's a tough one, Joey. That's a tough one. But what I need to tell you is that if you are, we'll do this at some point in the future. But I mean, when you're placing your stop loss, you must make sure that you place your stop loss at a point that if it is reached, it will reasonably indicate that that trade is wrong. You cannot put your stop loss based on the rand value or the maximum rand value that you are willing to lose. You must put it at the point where if that price is reached, you'd know that I was wrong on this trade. I wasn't supposed to take a long on this trade in the first place. That's how you should place your stop. But I will show you one day how to do that one, Joey. USD JPY. Sure, that one is difficult. I'm bullish. I'm bullish on the US dollar. I think the US dollar is still going to push higher. I like the US dollar. I like the US dollar. I think the US dollar is still going to rise. Let's quickly have a look at it. The US dollar is going to be the last one that we look at this afternoon. Okay, let's do this. Oh, US dollar looking good. Okay. I think this is the only thing that is putting the US dollar under pressure right now. The US dollar has been trading below this declining trend line since when? July 2015. Since July 2015, we haven't really had any nice break above this falling trend line if you look at it from a monthly time frame. But it looks like it's trying very hard to fight its way out of this declining trend line. We haven't really had any nice monthly close above that. If we do get one this month, there's a good chance that we could get this going back up to 114. Any break above 114, the next level I'm looking at is 116 or 117 on the US dollar, Japanese yen, and finally the next one I'm looking at is around 124. I think that's our next long-term target on the US dollar, Japanese yen. If you are a long-term investor, personally, I wouldn't mind going in and buying the US dollar and selling the Japanese yen. I wouldn't mind doing that. I think very soon, I think we're going to break out of that down trend and start moving higher. but that doesn't pay. You know, very soon doesn't pay. We need something that's going to work. Let's look at the daily time. Sorry, the weekly time frame. The weekly time frame. We're looking at the same falling trend line. We broke above this trend line. We broke above this trend line. We came down. 1 week we came down to retest. Second week we came down for a retest. We are trading above our simple moving average. We haven't really had any follow through after this breakout here. We haven't. But I mean, we've respected that area very nicely. That area I'm looking at 111, 110, 500, 600 area. The US dollar Japanese yen hasn't dipped below that area over the past 2 weeks. So that's a positive sign. We just need to wait for the bulls to gather enough strength to take the price out of this ditch it's in right now. After this, I think we can expect to see the price going straight up to 113, then from 113, 114. If we do manage to take out 114, like I mentioned, we're looking at 117, 118 area. From there, 123, 124, even 126 is possible on this one. If you are a patient guy who is willing to hold a position for a number of months, I think you can achieve 126, 125 on the US dollar Japanese yen, provided things continue improving in the States. Because I mean, the Japanese yen hasn't been to do anything with its interest rates. I think their main intention really is to weaken their currency against the US dollar to make sure that they gain that competitive advantage in the market. People they're gonna look at their goods I mean favorably if they are comparing the US goods against the Japanese goods. I think that's what they are doing they are trying to do they are sorry, I think that's what they are trying to do there really. The Bank of Japan there. Okay guys, okay, Munira, let me check. Oh, okay. Sorry about that, Munira. I don't know what's happening there. Very sorry about that. But I like the US dollar. I think that the US dollar is going to rise against the Japanese yen going forward. We are watching it very closely. As long as we are staying above that falling trend line and we are staying above our weekly SMA, the price is bouncing off that 110, 600, 110, 500, sorry, 110, 500 area. I think there's a good chance that you're going to get a bounce towards 113, then finally 114. If those levels are taken out completely, we're looking at the price climbing towards that 117, 118 zone. If that zone is one also, if we win that territory over, there's a good chance we're going back up to 123 first, then 126, 125, or 126, 125. That's what I'm looking at here. But yeah, it's a bit tough, I must admit. It wasn't very easy for the bulls there to take the US dollar out of this rising line. But it looks like they are winning that battle, guys. Guys, thank you very much for taking your time out to watch our technical analysis webinar. Okay, let me first have a look at what Success had to say here. I think I will have to go to Facebook, download the webinar because the network is very bad. Okay, no, that's fine. You can do that because we are going to be wrapping up at this point. We'll have another webinar session again tomorrow, Wednesday, Thursday. Friday we take a break. We do the trading room. Saturday we have another one once again. So guys, thank you very much once again. Have a great afternoon.